Per usual, living on this channel is for educational purposes only and is not intended as financial advice. I had a few people asking me to discuss open interest on the Teaching Tech Tuesday video, so that's what I'm going to do today. I don't talk about open interest too much, which is similar to volumes. Essentially, open interest is just referring to the number of futures contracts or options contracts that are open for any given asset. You can separate that into long, short. You can separate that into put call ratio. You can look at the individuals who are long within that open interest or short. For example, is it a hedge fund? Is it Joe Public, Joe Pleblic? Is it you and me? Basically, that's where we get into the commitment of traders data. The question I often ask myself is whether or not there's a signal most of the time for any of this stuff. For me personally, in my trading, it is not. But hey, this is a buffet. For me, this is the sauerkraut at the buffet. Okay, I don't like sauerkraut, but I know some people love sauerkraut. I'm more of a kimchi person than sauerkraut. But just from a buffet perspective, it's important to know in your tool belt what open interest is. Occasionally, you'll see people talking about it. Maybe it's a high signal for you in your trading, as I know it is for some people. Things to consider for crypto specifically. So we're coming up on a decade of having decent market infrastructure, let's say, since GOX imploded, which happened early 2014. But really it was that first rally, mania rally, kind of in late 2013, around this time, where trading cryptocurrency, specifically Bitcoin, started to emerge. And since that time, we haven't had a single dominant exchange. We've had, over time, different futures or options markets mattering more than others, going by the wayside. I remember back in the day, we'd look at the OKEx open interest, who was long, who was short there. Bitfinex open interest was extremely important, is no longer very important. BitMEX, much the same. Open interest there used to be extremely important. These days, Deribit is the market leader on options, so we'll talk about them a little bit. The problem with Binance I have is just like their volume information, I don't know what's real and what isn't. The same with Bybit, Rollbit, right? Any of these other exchanges that are offshore derivatives exchanges, I really don't have a clue what's going on there. So it's very hard to take any of that stuff seriously for a signal. We can say in aggregate open interest is blah, and the sheep are ripe to be culled from the herd or something, right? Like that makes sense to me, but on any given day to just look at that and pull that up, for me, isn't very useful. As we get TradFi growth of crypto products and infrastructure like the CME, we get more actually like regulated to the max type of trading for Bitcoin, for ETH. So then we can start seriously looking at least for me, open interest in a real way. Some other things to consider. I already talked about futures versus options. You'll see the open interest listed as USD versus crypto. That can be important, especially in DeFi, to know what the difference is there. It might look like open interest is rising or falling if you're in a specific metric here when not much is happening on one side or the other, right? And then obviously you need to know, is this a centralized exchange, a DEX? Is this TradFi? Is something going on right now in DeFi where all of a sudden there's a bunch of open interest, or is somebody trying to cash out, or is somebody net short on some position because they have information that some product is going to explode, right? You never know. So where you look at this stuff and which exchange is extremely important, because you're going to get different results. Now, for most people, it's probably going to be easiest to look at the aggregated data. Luckily, we have a few places we can get that for free. This is in no particular order. This list on where you're actually going to look at this stuff: Glassnode, CoinGlass, Coinalyze, CryptoQuant, look into Bitcoin, Deribit metrics, again, the option side, much more volume than even the CME stuff. Deribit is not US based, so keep that in mind, but they're the de facto leader in options for Bitcoin. And there's, of course, Dune Analytics for the DEX or the DeFi side of the house. So open interest can help you understand sentiment, which I'll hit on in a second. We can look at long versus short, put versus call, right? There's also other types of strategies that are important to know exist. Hedging strategies, carry trades, which can make open interest look a certain way when maybe that isn't the case, right? Maybe you're seeing a bunch of volume, or you're seeing a bunch of open interest in a derivative product, when somebody is maybe short spot, long the future, and is maybe a more advanced trade than just, I think price is going to go up or down. I'm bullish, I'm bearish, right? It's different. And for me, it's easier to learn this stuff backwards. So I like to look at, practical examples of what happened. And one thing that immediately comes to mind when we're talking about a short squeeze, what does that mean? Well, it means that in aggregate, open interest was heavily expecting price to go down. And if price doesn't go down, they can either continue to lose money, or as a short, you can cover your position, and that effectively pushes prices higher. Obviously, the GME AMC stuff that happened early 2021, which feels like yesterday, it's almost been 2 years since now, 3 years, whatever. You had one specific hedge fund, but lots of big players, they go in here, they talk about Citron, they talk about Michael Burry, they talk about other people, but you had people who were continuing to pile on open interest on the short side. They were continuing to short, and they were getting more and more wrong, requiring more and more capital to prevent themselves from getting margin called. So this is one specific type of example where knowing who's trading these positions and which side of the trade they are on can be extremely helpful. As Paul Tudor Jones famously had on his bulletin board, losers average losers. And when you're on the wrong side of the trade and you keep doubling down in a big way, that just gets out of control, right? It spirals out of control. It clearly spiraled out of control for the meme stonk shorters in 2021. And as PTJ says again here, you never want to trade in situations where you don't have control. So clearly they knew what open interest was for the meme stonks, but they were sure that they were right. It didn't matter that the market is the market, and the market is going to do what it wants, and the market can remain irrational longer than they could stay solvent. And ultimately, the middle of the year, in May 2022, they closed down, right? They got margin called IRL after losing billions of dollars. And typically, you see these type of moves when people are making directional bets before direction is actually decided. So in both GME and AMC's case, they'd been effectively ranging for a year, and you had maybe the fundamental side where people were saying, this has to go lower, these businesses are dead, it's over, right? And OI, open interest, is just piling short. There's more short float than stocks actually in existence, right? That's part of the derivatives game. And wouldn't you know, it goes higher, goes against them. They keep doubling down, they keep getting increasingly wrong, and prices still go higher. And then they get in trouble, right? This is why it's important to have stop losses, understand market movements, understand when you're wrong and where you're wrong and why you're wrong, because you don't want to get carried off the floor like Melvin Capital did, okay? And we've had instances of this on Bitcoin as well throughout the years. I don't have the data for this anymore, which is another part of the problem. For open interest data, a lot of it we don't have going back, aggregated open interest that I'm able to find for 10 years, let's say. But in 2016, there was mega growing short interest on Bitfinex that really helped push this pattern higher, right? So for me as a technical analyst, it already leans bullish because it has an ascending triangle. But what really helped propel this higher quickly, where people got off sides super quickly, were the people that were short and sure this was going down. Same was the case in 2019. Sentiment was extremely bearish. We were ranging, we had been ranging, we had slowly been pushing up. And at this time, I believe, from memory, open interest leaned extremely short. And eventually those people got off sides in a big way, had to close their positions or get liquidated, which effectively pushes price even higher, right? Which is why when I see something like this is TLT, this is people betting that rates are flat or will come down. They're saying it's going to be a bull market in bonds. These are options, the put call ratio, or it's effectively just calls here, right? It's just people saying, look, this is the bottom. I know it's the bottom. It can't go lower. I'm going to catch this knife here. And if this group of people is wrong, they will just be incinerating money extremely quickly. And it's also worth noting, like I mentioned yesterday, this is some hedging stuff. This is not just flat like directional bets here, but it could get very ugly very quickly if, let's say, rates go to 5% plus. They keep going higher. Rates at 6%, right? What do all those calls do? They just get obliterated. So when you start to see data pop up in the lexicon talking about put call interest, open interest, short squeeze, long squeeze, open interest at an all-time high. That's another good one. You know, when I look at the aggregated data in a second, I'll show what I'm talking about there. But as Jason Shapiro talks about asymmetric trade opportunities, that's to me where open interest is the most valuable. You know, I'm not going to look at day-to-day movements in open interest and make the trading decisions from that. What you're really looking at is how many people can be wrong, right? Because if a lot of people can be super wrong, price tends to go in that direction. Price tends to go in the max pain direction. There are no free rides, and the crowd is generally not correct most of the time. That's why on the Bitcoin side of things, when I see people who are still extremely bearish, right? Sentiment generally for the asset class, still extremely bearish, not a lot of money in the ecosystem. The potential for people to come into the ecosystem is enormous, trillions of dollars, right? You don't have the entire world who's already long. You have effectively the entire world who doesn't even own Bitcoin yet. And in a sense, they are net short Bitcoin because they are not holding it. So I would say the global open interest relative to the money supply, right, is extremely low as a percentage for Bitcoin. So before I talk about some more data points here on aggregated open interest, let me mention today's video sponsor, Kraken Pro. Kraken Pro is a complete overhaul of the Kraken trading experience with a one-stop shop for advanced and professional traders. Kraken Pro enables efficient trading execution across multiple markets with a UI that allows for unique optimization tailored to your trading style. You can check out Kraken Pro with the link in the description of this video. I'll put all these links for everything I'm talking about in the description of the video. Kraken does own a futures side of the house called Crypto Facilities. If you have access to that, you can pull up open interest on Crypto Facilities, so it can be useful for you. Bitcoin and ETH not doing too much today. On the bullish side, ETH kind of selling off. Volume's just kind of not too excitable at the moment across the board. So not much going on the crypto side of things just yet. And back to open interest, CME has a great little mini lesson here if you want to learn more. There was a great article I found on CoinMarketCap about open interest as well. And you'll see stuff like this where people are looking at price, volume, and open interest. And there's some signal here probably as far as discerning whether or not there's some sort of divergence in the market, right? Are we going higher on a weak market or a strong market? Are we going lower on a weak or a strong market? Not something I use, but I can see how people would potentially use that to their advantage. For the crypto side of things, this is just Bitcoin, looking at a few different exchanges here, but you'll often see open interest against price. This is on Look Into Bitcoin. This is CoinGlass, probably one of the better ones. Historically, you can see futures open interest in aggregate, where it's sort of topped out, where the market has found exuberance effectively at that time, right? Open interest has adjusted, this is in USD, has adjusted maybe to the new normal as we have more institutional products, as we have more products in general post 2020. So this is a moving target in a sense that in a certain period of time, you're going to see open interest accelerate or decelerate in a large way. And over multiple years, that may change, especially as the industry grows and matures and things like that. Now, you can always look at specific exchanges, specific timeframes. Again, that's not really my bag, but I can understand where people find that valuable. And depending on which exchange you care about, you know, just looking at the previous two all-time highs we got, you know, the first one we had considerable open interest, the second one less open interest on a higher high, so I would consider that a bearish divergence, right? That's about as far as I would go. Looking at aggregated open interest is something like that. Now, if you look at global open interest, told you a similar but weaker story, but generally anytime you're getting higher highs or lower lows, you want to see open interest momentum on your side there. In the current spot here for Bitcoin and ETH, we're not really seeing anything specific. And on CoinGlass, you can look at all the coins here, should you be so interested, right? Just kind of flat across the board on ETH. Glassnode has a version as well. That's a paid service. CryptoQuant also is freemium, but they have an open interest aggregator. One of the best free sites is probably Coinalyze, which I don't actually hear too many people talking about, but they've got a ton of coins and contracts, and you can look, and on their website, you can see the aggregated open interest here as well on specific timeframes, should you so choose. And then of course, Dune, like I mentioned, you know, on the DeFi side of things, if you're trading derivatives, it is worth looking at open interest and who's trading, and is the trader with the dominant viewpoint correct most of the time, right? That's also worth looking at and knowing. As we sort of drift on to talking about options a little bit, put call ratio is a popular sentiment gauge, and as they sort of say in here, a put call ratio greater than 0.7 is bearish. Put call ratio below 0.7, approaching 0.5 is considered bullish. Sentiment isn't always correct, so keep that in mind. This is just about what people are actually doing in the market, and we can look at that for Bitcoin and ETH over time. Occasionally you'll hear about this when it's crossing certain levels, but currently both the put call ratio for Bitcoin and ETH is below 0.5. So we're not seeing a lot of bearish bets on Bitcoin and ETH here. We're not seeing extremes per se either. Very much just flat, middle of the road. Now on the Deribit side of things, we can also look at open interest by expiration. You'll often hear headlines, there's X billion dollars expiring this Friday, right? This is what they're talking about. This is what they're looking at. And you can separate that out on the option side, calls and puts. You can see we have a huge expiry currently at the end of the year, December 29th, 1.7 billion notional value in calls, 0.86 billion in puts. So what this will tell you is there's important positioning based on size for this specific date. So there can be volatility around those times, right? So it's worth paying attention to on occasion, usually at the extremes, not necessarily when nothing's going on. Right now, you're not going to see too many people generally talk about open interest unless they're talking about declines in open interest. And you can look at the futures side here as well for Deribit. On the legacy side, on the TradFi side, there are a few places you can look at open interest as well. You can look at put call ratio, all that fun stuff. Again, in the moment, I think it's kind of too new to get a good signal. There's not that much data. I'm not saying it isn't worth looking at, but I think it's just a little fresh. We're still getting people making a decision on deploying capital to this asset class, not necessarily, trying to figure out if they're long, short, hedging, whatever in the meantime. Another way we can separate this out is the commitment of traders data. This looks at the types of people who are long or short. And if we look at a visual representation of that, this is some random product, commodity heating oil. The commercials are in red, so those are the producers of the heating oil. Small speculators would be you and me. Large speculators would be hedge funds. And what Shapiro argues and talks about all the time is, it's not being about right or wrong. It's about finding asymmetrical risk return profiles here. And what he looks for specifically in this data, he likes to be on the side of the commercials, and he likes to be against large and small specs, especially when there are turns in the data, and especially when he's seeing maximum positioning like he was here. And really what he's just looking for is, in a sense, kind of short or long squeezes, right? So this would be a massive long squeeze in the making potentially for heating oil. And I pulled up the chart here, and what do you know? What did we get over the past several weeks was a massive move down. He also argues that the people who wanted to be long effectively are already long. So it's harder to continue to push this market up, right? The same thing with aggregated open interest generally for any given time period. If you're seeing $1 billion in open interest, this was like sort of the magic number for MEX back in the day. That for that exchange, that was kind of the maximum where we'd see it was about time for the sheep to get culled, right? It was about time for the herd to understand that there's no free rides, and there'd just be volatility getting rid of people, right? Just liquidating people generally. So knowing a little bit what's going on the derivative side, depending on the exchange, can help you. This is data for Bitcoin a few weeks back now. I think the current data, you're seeing large speculators decline, you're seeing commercials decline their positions. So everybody's kind of declining in their positions, the same with small spec. And you can get this data for free on bar chart. He just kind of visualizes it like this. But what he was saying on this day was be careful because, again, long speculators or large speculators are extremely long. Commercials extremely short. Commercials in Bitcoin's case would be miners. For ETH, I don't really know who commercials would be, but much of the same thing. A few weeks back, large speculators very long. So it's slightly different than open interest, just as is, but semi-related, And again, you can find this on bar chart. I'll put this in the description if you're curious, and you can look at the data. This is usually, how ugly this looks on a visualized component. I'm sure you can pull it up in TradingView as well. And on the CME, there's micro Bitcoin futures and options. I don't know if there's micro options for ETH, but as we get more and more and more and more products, understanding the aggregate stuff can be useful. Here's another example, right? We can look at that a slightly different way, where we get, who are the large open interest holders? How many of them are there? This is sort of another sentiment gauge for the asset class, not as much direction, right? Generally, this should be bullish if we're getting more large open interest holders on a futures product in TradFi. That's obviously no guarantee. So you can go extremely deep on open interest. For me, the sweet spot is look at the aggregated open interest, kind of ignore the exchange, but just look at aggregated open interest until we have a market leader on futures or options, and try to understand where the most people will be off sides of a direction, right? Is the market setting up for a potential squeeze? Are people getting super, super short? What does sentiment look like? Open interest can help with that. It's no guarantee, obviously. But for me, when the technicals point a certain direction and you see sentiment and open interest and shorts or longs rising in the opposite direction, right? That's typically when you have the recipe for a pretty extreme move and a good opportunity for an asymmetrical risk reward opportunity. That's all for this one. Like, dislike, comment, share, subscribe, and happy trading.